Welcome to our guide on how to invest in mutual funds. Mutual funds are a popular investment option for many people because they offer a diversified portfolio of stocks, bonds, and other securities. In this video, we'll cover the basics of mutual funds, how they work, and how you can get started investing in them. Before we dive into the details, let's start with the basics. A mutual fund is a type of investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, and other securities. The fund is managed by a professional fund manager who makes investment decisions on behalf of the investors. Investing in mutual funds can be a great way to grow your wealth over time, but it's important to understand the risks and benefits before you get started. In this video, we'll walk you through everything you need to know to make informed investment decisions. So grab a pen and paper and let's get started. There are many different types of mutual funds available, each with its own investment strategy and risk profile. Let's take a look at some of the most common types of mutual funds. First, there are equity funds which invest primarily in stocks. These funds can be further divided into large cap, mid cap, and small cap funds, depending on the size of the companies they invest in. Next, there are bond funds, which invest primarily in fixed income securities like bonds. These funds can be further divided into government bond funds, corporate bond funds, and high yield bond funds, depending on the type of bonds they invest in. There are also balanced funds, which invest in a mix of stocks and bonds to provide a balanced portfolio. These funds can be further divided into conservative, moderate, and aggressive funds depending on the level of risk they take on. Finally, there are specialty funds which invest in specific sectors or industries, such as technology, healthcare, or real estate. These funds can be a good option for investors who want to focus on a particular area of the market. It's important to choose a mutual fund that aligns with your investment goals and risk tolerance. Now that you know the different types of mutual funds available, let's move on to how to choose the right mutual fund for you. Choosing the right mutual fund can be overwhelming, but there are a few key factors to consider that can help you make an informed decision. First, consider your investment goals. Are you investing for short-term or long-term goals? Are you looking for income or growth? Understanding your investment goals can help you choose a mutual fund that aligns with your needs. Next, consider the fund's investment strategy. Does the fund invest in stocks, bonds, or a mix of both? Does the fund focus on a particular sector or industry? Understanding the fund's investment strategy can help you determine if it's a good fit for your portfolio. Another important factor to consider is the fund's performance. Look at the fund's historical returns and compare them to its benchmark and other funds in the same category. Keep in mind that past performance is not a guarantee of future results. Fees are also an important consideration. Look at the fund's expense ratio, which includes the management fee and other expenses. Lower fees can help boost your returns over time. Finally, consider the fund's risk profile. Every mutual fund has a level of risk, which can be measured by its volatility and standard deviation. Make sure you understand the fund's risk profile and how it aligns with your risk tolerance. By considering these factors, you can choose a mutual fund that aligns with your investment goals and risk tolerance. Now that you know how to choose a mutual fund, let's move on to how to invest in one. Investing in a mutual fund is easy and can be done in a few simple steps. First, choose a mutual fund that aligns with your investment goals and risk tolerance. You can do this by researching different funds online or with the help of a financial advisor. Next, open a brokerage account with a reputable broker. Many brokers offer access to a wide range of mutual funds and can help you choose the right one for your needs. Once you have opened your brokerage account, you can place an order to buy shares of the mutual fund. You can do this online or over the phone with your broker. Keep in mind that mutual funds are priced based on their net asset value (NAV), which is calculated at the end of each trading day. This means that the price you pay for the mutual fund will depend on the NAV at the time of your purchase. Finally, monitor your mutual fund investments regularly and make adjustments as needed. Rebalancing your portfolio periodically can help ensure that your investments continue to align with your investment goals and risk tolerance. Investing in mutual funds can be a great way to grow your wealth over time. By following these simple steps, you can start investing in mutual funds today. Congratulations! You now know the basics of how to invest in mutual funds. Remember, mutual funds can be a great way to grow your wealth over time, but it's important to choose the right fund for your needs and monitor your investments regularly. If you're new to investing, consider working with a financial advisor who can help you choose the right mutual funds and create a diversified portfolio. And always remember to do your research and understand the risks and benefits of any investment before you get started. Thank you for watching our guide on how to invest in mutual funds. We hope you found it helpful and informative. Happy investing!